So, how to invest in silver's accelerating bull market? I'm going to cover four aspects of this. First is silver's demand drivers. Right now, those are essentially inflation and industrial demand. I'll go then into what's next for silver. I'll talk a little bit about its accelerating bull market, and then finally, how to invest in silver. There's a lot of talk lately about inflation, and recent numbers that were reported. Core US consumer price inflation showed the largest yearly increase since 1992. So yes, the Fed keeps talking about it being transitory, but certainly from all of the indicators that we have and the research that we're doing, it certainly looks like inflation is here in a big way and likely to stick around. It's not just me saying it either. Everyone knows Warren Buffett. He's probably one of the best placed investors to give a point of view on this, given his conglomerate and all the different sectors that Berkshire deals in. And he recently said, we're seeing very substantial inflation. It's very interesting. We are raising prices. People are raising prices to us, and it's being accepted. And we look at someone like Richard Galanti, who is Costco's CFO, and they're saying very similar things. They see a variety of inflationary pressures. They and others are noticing inflationary factors are pretty much everywhere: higher labor cost, higher shipping, transportation, container shortages, and it's across sectors, everything from computer chips to oils, chemical supplies, facilities hit by the Gulf storm, and across the commodity sector as well. So how does this affect silver? Well, we are in fact in conditions that are ideal, both from the demand, for both demand drivers, both the inflation hedge and the industrial demand side of silver demand. Inflation expectations, which is a separate thing from inflation itself, just the outlook on what inflation is expected to be going out over the next 5 years. Now, if we look at the chart on the left, that plummeted in early 2020. Quickly recuperated, and in fact has been soaring pretty much relentlessly ever since then. And that gives you an idea of what the economy in general, what people are thinking and expecting, and concerns about inflation. In fact, recent levels have surpassed inflation expectations going back over 3 years at this point. If we look at the consumer price index, we see that prices, in fact, have been accelerating. The chart on the right is the consumer price index for all urban consumers. It's the US city average, and it excludes food and energy. That, of course, dipped in the early part of last year, quickly recuperated, went back to sort of the same pace of gain, and then early this year absolutely exploded higher. And so we certainly have an indication of higher inflation on the consumer side. Another indicator is, as I said earlier, industrial and what commodities are doing in this case. So commodities tend to rise in lockstep with inflation expectations. The chart on the left actually plots the two of these side by side. And you can see a very, very close relationship, high correlation between inflation expectations and what commodities do. And as far as commodities go, if we look at commodities from the point of view of producers, where often these are their raw materials for manufacturing and production, the producer price index for commodities, all commodities, recently broke out to a level that is a high, well beyond anything we've seen for years, has surpassed the 2008 high, and certainly is on quite the strong trajectory. And if we look further back at commodities in general, in terms of commodities prices relative to the S&P, if we go back 50 years, we see that it goes through some large cycles. It peaked in 2008, where commodities were relatively expensive. They've been dropping dramatically against the S&P, and it looks certainly like commodities are bottoming and due for quite the reversal. That certainly seems to have, looks to have started to take place. If it were to regain sort of its average of the last 50 years, we're looking at probably an 8 to 10 time return across the board on commodities from this point. A lot of this is being driven from what we call the fourth industrial revolution. Um, the interesting thing about this revolution is it is things like networks, interconnectivity. It's certainly driven by clean energy. What's different is that it's globally coordinated, and it's a strategic effort on the economic and the social side. Silver certainly benefits a lot across the board, many ways from green energy and this green revolution, and I'll touch on that a little bit later. If we look at silver supply over the last several years, mine supply actually peaked in 2015, has been dropping, in fact, every year since then. It was worsened with the COVID shutdowns, of course, because miners were challenged in terms of being able to operate, but it's an industry-wide issue. We've seen that it's also fallen across the 10 largest silver producing countries over the last 5 years, and none of them, of course, has been spared. What's interesting about silver from the supply side, the mine side, is that primary silver mining is under 30% of the market. Something like 73% of silver is produced as a byproduct of other metals like gold, lead, zinc, and copper. So what happens is if the price of silver rises, producers of these other metals have often little incentive to try and increase their silver production, simply because it tends to be a small portion of their revenues. So we call that inelastic. In other words, the silver supply is inelastic to the silver price. And so that encourages or it fosters a bit of a lower supply. We have a situation with lower supply, growing demand, and that tends to exacerbate to even higher prices. We look at silver demand in 2020, and in this case, excluding the demand from the ETF side, 54% of demand came from the industrial side of demand. That a lot of that is solar panels and electric vehicles. 22% came from net physical silver buying, things like coins and bars. But what we do know is that silver investment has been exploding, especially on the ETF side. Actually, in 2020, 330 million ounces were bought up by silver ETFs. Certainly an aspect of demand that's hard to, if not dangerous, to ignore. In fact, by early this year, the entire inventory held by silver ETFs globally reached over 1 billion ounces, which is an equivalent to an entire year's supply of silver. And that helped push demand for physical silver through the roof. Premiums for coins and bars are still, in many cases, triple what normal levels tend to be. They've gone from about 12 or 15% to very close to 50%. Many of you are probably aware of the Wall Street bets and silver squeeze movements. They've certainly driven a lot of attention to the silver sector. And we now have perhaps a entirely new generation that's watching and participating in the silver investment space. And even just recently, the US Mint called out a global silver shortage for an explanation for why they are certainly limited with supply, citing record demand in that aspect. Here I've run my own numbers where I've included the demand from silver ETFs in 2020, and it certainly makes the demand pie look very different. What it does is industrial demand actually represents about 40% when you include ETF demand. And the physical and ETF side, if you group them together, actually represent something like 43% of entire demand for silver last year. Again, ETF demand and investment demand certainly is something that can't be ignored. It's been a bit of a wild card lately. And so if you include the ETF demand last year, then the net supply of silver was actually in a deficit scenario by as much as 250 million ounces, which was 25% of the entire supply of silver for 2020. Silver certainly has many industrial applications, and that's what makes it interesting as a metal and quite different from not just precious metals, but base metals as well. So it has industrial applications, but it's also considered a monetary metal. On the industrial side, solar panels are probably the single largest driver of demand. They represent 10% at 100 million ounces per year. And the green revolution certainly is increasing the demand for solar panels and the silver that goes into them. Now, thrifting has reduced the silver demand per panel, but that seems to be being made up by the amount of growth in installations. Automobiles, especially with newer technologies, we see that EVs require twice the amount of silver that internal combustion engines require. In 2020, 60 million ounces were demanded from the automobile sector, and the Silver Institute expects that to reach 90 million ounces by 2025, which is 50% higher. Electronics are a big driver as well. Printed and flexible electronics in 2020 represented 48 million ounces, and that's expected to rise to as much as 74 million ounces by 2030. We also know that silver is important in medicine, and with the experience of the last year and a half with COVID, we certainly can imagine all sorts of applications where silver can help to kill bacteria. It limits infections. We find it embedded in medical devices and equipment. Silver nanoparticles are used in things like cornea replacements and contact lenses, and we see developments almost daily on that on the medicine front with silver. As I said earlier, demand for silver in the automotive sector is quite strong. EVs requiring as much as 2 times as much as what an internal combustion engine requires. And something that's perhaps less appreciated is the EV infrastructure of charging stations, where silver is certainly required at quite a high level as there as well. I mentioned electronics earlier. We certainly see strong growth there. 32.5% of global silver supply goes to electronics, so that's nearly 330 million ounces last year. And we see 54% growth into 2030 on the printed and flexible electronics demand aspect of silver. This represents things like on-off switches, RFID inventory tags to track items, to track inventory. And then we talk about things like smartphone sensors. It's really across the board in higher end electronics these days. So what's next for silver? Well, what we do know is that silver is still quite cheap. If you look at silver versus the money supply, silver bottomed in around the year 2000. We had a considerable run up and then correction from there. The silver price versus the money supply likely bottomed again last year in 2020. We've seen quite the bounce from there, and certainly all indications are that it's going to continue rising from that point of view. If we look at the gold-silver ratio, so that's how many ounces of silver it takes to buy an ounce of gold. Right now we're at around 67 to 70 ounces of silver. That ratio peaked in March of last year, around 125, which was an all-time high. I believe it's heading likely down to around the 55 level. If we use round numbers and we estimate, say, gold at $2,000 and a 55 gold to silver ratio, that would imply $37 silver at this point, which is a nice 32% gain in the silver price from here. So what has silver done in the past? Well, in the 1970s, so in that decade, silver was up an astounding nearly 37 times, from about $1.30, I believe, to nearly $50. We saw a repeat to up to $50 in the 2000 to 2011 period, where silver was up over 10 times, nearly 11 times. And to give you some idea of what silver stocks can do versus the silver price, in 2016, in the first half, we saw the price of silver up about 48% over the first 6 to 7 months. And we saw silver stocks, this is on average, silver stocks were up 5 times, about 240% in that same time frame. So far since the bottom in March, Silver stocks have been up about 125%, whereas gold stocks are up about 85%. So we're starting to see a considerable outperformance. We know that silver stocks also tend to outperform gold stocks in silver bull markets or in precious metals bull markets. We expect that to continue as the gold-silver ratio continues to fall. So silver's in an accelerating bull market. Let's look at that a little bit more. In the 1970s, as I said, silver peaked near $50. It then went through a multi-decade correction and did something similar back in 2011. We see silver starting to climb once again. I certainly expect silver will take out relatively easily, eventually, that $50 high and considerably and rise considerably from there. As I mentioned earlier, silver always outperforms gold in bull markets. If we look on a percentage basis, the climb in silver in the 1970s and the 1980 peak was a multiple of gold's gains. We saw a similar thing back in 2011, where silver's gains, again, easily outpaced gold's. And right now, silver is close to about 50% of its all-time high, whereas gold is only about 10 to 15% below its all-time high. So from that perspective, silver certainly looks like it has a lot of catching up to do. The outlook for silver is quite strong. Silver stocks are historically cheap. There's been a considerable decrease in spending over the last several years by silver miners. They've been, on average, depleting their reserves, which need to be replaced. So that makes a lot of sort of the mid-tier developer juniors more attractive, as the larger producers will start looking to replace depleting reserves. And to give you a bit of perspective, the Silver Institute this year said the outlook for the silver price in 2021 remains exceptionally encouraging, with the annual average price projected to rise by 46%. So how do you invest in silver? Well, you have plenty of options. Physical silver would be one of them, coins and bars. However, right now, as I mentioned earlier, premiums are very high, in many cases triple what they normally are. Your next option might be physically backed silver ETFs. My standout preference there is the Sprott Silver ETF. It has very low premiums to the silver price. And just given how the ETF is built and how and where the silver is stored, et cetera, I'm certainly most comfortable with that ETF for silver. From there, you have silver miner ETFs, which is a basket of silver miners. You have larger producers. There are also silver miners that are juniors, which is a second type of ETF. And from there, you have individual companies that are in varying degrees of risk. You start sort of on the lower end with royalty and streaming. From there, larger producers, growing producers, developers, and juniors. Vetting silver investments. So in general, I have sort of three main criteria. My first is to look at management. I look for management that has plenty of experience, plenty of depth, and can demonstrate several prior successes. Exploration companies have to show that they have access to knowledge resources to help advance their projects and their exploration, especially on the technical side. Grade is certainly a big issue. In general, higher is better. If it's a company that's not producing, I look for ideally a resource where 50% of the resource is represented by silver in terms of value, at least on the company's main project. If it's a producing company, I look for 50% silver value by production, silver revenues. And then thirdly, location. Certainly safer is better. From that perspective, I favor North America, so Canada, the US, and Mexico. Some Australia, some parts of Europe. South America is becoming, almost on a daily basis, more difficult and offering fewer and fewer acceptable choices. A few places are okay. Many of those I would otherwise tend to avoid. So to recap and give you an overview, Silver Stock Investor is a silver-focused newsletter. It's all about what I buy and sell with my own money. It's unbiased research. I receive no compensation from any of the companies that I write about. I cover the entire risk spectrum, everything from the silver ETFs and larger producers through to royalties, growing producers, developers, optionality plays, developers, again, and silver exploration, junior silver exploration companies. The newsletter is aimed at new and experienced investors, and so I cover everything from low up to high risk stocks. It's published by Resource Maven. We are independent and supported by subscribers exclusively. We never take money from companies for coverage. And as a precious metals expert, I contribute to various websites and do interviews and so on with several of these outlets. So I just want to encourage anyone that wants to know a little bit more. You can go to silverstockinvestor.com and remember, silver is in an accelerating bull market. It's certainly an exciting place to be.